This is what makes XRP unique from all other cryptocurrencies. Cryptocurrencies like Bitcoin and Ethereum are a big deal in today's world, not only because of the absolutely insane market capitalization they hold, but also as an investment option. But is XRP by Ripple just another new cryptocurrency riding on this big, fat Bitcoin speculation roller coaster? Or is it something more? Hey guys, and welcome back to Crypto Millionaires, a channel where we teach you everything about investing in crypto. Please like and subscribe if you are new here. In today's video, we will talk about what makes XRP unique from 1,600 available cryptocurrencies in the market. So if you want to know more, stick to the end of the video. Let's get right into it. Differences between Ripple XRP and other cryptocurrencies. Guys, in order to get a more clear understanding about the differences between Ripple XRP and other cryptocurrencies, we need to understand what Ripple XRP is. What is XRP? XRP is a digital asset built for payments. It is the native digital asset on the XRP ledger, which is an open source, permissionless, and decentralized blockchain technology that can settle transactions in 3 to 5 seconds. XRP can be sent directly without needing a central intermediary, making it a convenient instrument in bridging two different currencies quickly and efficiently. Faster, less costly, and more scalable than any other digital asset, XRP and the XRP ledger are used to power innovative technologies across the payment space. Ripple is focused on building technology to help unleash new utility for XRP and transform global payments. Third parties are also pursuing other XRP-related use cases. RippleNet customers can use XRP for sourcing liquidity in cross-border transactions instead of pre-funding, ensuring instant settlement, lower exchange fees, and more efficient use of working capital. The XRP ledger is maintained by independent participants of a global XRP community, of which Ripple is an active member. Independent validator nodes come to an agreement on the order and validity of the XRP transaction. This agreement, called consensus, serves as a final and irreversible settlement. The ledger reaches consensus on all outstanding transactions every 3 to 5 seconds, at which point a new ledger is issued. Anyone can be a validator, and active validators on the ledger today include universities, exchanges, and financial institutions. There are currently 36 validators, and Ripple runs 6 of them. XRP as a currency. Ripple's solution is not a new concept. In fact, XRP's role can be considered similar to the role that the US dollar plays in international markets. The greenback, or the US dollar, is the bridge currency used for numerous international trade transactions and currency conversions. It is especially useful for conversions between currencies that are thinly traded on international markets. For example, a conversion between, say, Kyrgyzstani sum and Japanese yen would be routed through the US dollar. While it can also be used in XCurrent and XVIA, Ripple's other two products, XRP Transactions and XRapid, have certain advantages. According to Ripple's CTO, Stephen Thomas, XRP is quicker and cheaper at fractions of a penny and about 3 seconds faster per transaction compared to other digital assets. XRP offers other advantages as well. Using XRP, banks can source liquidity on demand in real time without having to pre-fund Nostro accounts. But transactions using XRP come with their own set of risks. For starters, XRP's bridge asset status means that financial institutions are dependent on Ripple to provide liquidity for transfers. Its supply and demand determines transfer value and count as an external risk. That risk magnifies if you consider the inherent dangers of using a cryptocurrency traded in volatile markets. For example, spikes or crashes in XRP's value could hinder transfers and increase or decrease their value. XRP as a security. In February 2018, the United States Securities and Exchange Commission, SEC, alleged that Ripple Labs executives Bradley Garlinghouse and Christian Larson manipulated the XRP price by slowing down or speeding up sales depending on the market. The SEC accused Garlinghouse and Larson of creating information asymmetry that allowed them to continue selling off XRP at a substantial risk to investors. The crux of the accusation was whether XRP could be deemed a security offering or not. In 2020, former Commodity Futures Trading Commission Chairman Christian Carlo argued that XRP should not be deemed a security offering because it did not fit the criteria of the Howey test. Cryptocurrencies such as Ripple XRP, XRP USD, Bitcoin, BTC USD, Ether, ETH USD, IOTA, IoT USD, Litecoin, LTC USD, and others run on a blockchain ledger system. This is designed to keep the cryptocurrency process transparent and monitored by a decentralized community. When taking a closer look, each coin has its own purpose. Some, like Bitcoin, are designed as a form of currency to be used at any marketplace. Others, such as XRP and Ethereum's Ether, are designed as currencies for specific platforms. Main differences in the cryptocurrencies. Understanding the differences between these digital coins can help traders to better understand the short-term and long-term potential of each currency. The ledger system. All of the above-mentioned currencies have ledger systems that keep track of each coin's movement. This allows for individual verifiers on the network nodes to confirm that a transaction is legitimate and the payee is the rightful owner of the coins they are trying to pay with. This also applies to meeting criteria of smart contracts or other blockchain automatic payments. The difference with XRP is that only 80% of the nodes need to agree. This allows for transfers to run more smoothly with a lower potential for delays. On the other hand, having a unanimous consensus is a key feature that makes blockchain secure. Using XRP was designed as a currency to be used on Ripple's blockchain platform. For example, if a customer wants to transfer money to a merchant across the globe, they can either ask their bank to send the money through a web of bank relays, or they can convert the currency into XRP, where the merchant can receive it on the other end instantly. While this is very convenient, a downside is that it forces an individual to pick XRP even if they already have Bitcoin or other cryptocurrencies. On the other hand, it protects the transaction by using a closed system and ensures a use case for those who hold the coin as an investment. Processing speed. Ripple's suite of products, including XRP, are designed to transfer money rapidly across the globe, similar to how credit cards work. Global recognition and speed are important to merchants who want to work internationally. XRP can process 1,500 transactions per second with an average ledger settlement or approval time of 3 to 5 seconds. This is in comparison to Ether, which takes an average of 13 seconds, and Bitcoin, which takes around 10 minutes. This speed makes XRP a potential currency for instant transactions in comparison to other leading cryptocurrencies. Mining. XRP cannot be mined. Mining is the process of verifying transactions in exchange for the coin. This is how validators are compensated on the Ethereum and Bitcoin networks. Contrary to some other coins, Ripple destroys coins with each validated transaction as a transaction fee. How is Ripple's network maintained? Ripple's monetary transfer systems are trusted by banks around the world. In order to ensure this trust, while remaining transparent, Ripple employs a blend of both centralized and decentralized protocols. Ripple Labs chooses which protocols validators must follow. In addition, it releases a recommended unique node list, or UNL, of trusted and verified validators. Ripple users are not required to use these validators for transactions, although it is recommended. In addition, validators operate independently without needing to check in with a central system before updating their ledger. This begs the question: is Ripple a centralized or decentralized platform? Ripple is centralized with regard to protocols and acceptance onto the network. It is decentralized with respect to how transactions are validated. Ripple's products, including XRP, are created to be moved quickly and efficiently. Ripple Labs' global network of active users, along with the ability to integrate payments into apps, ensures a use case for XRP. This can be attractive to traders who feel that XRP holds a potential long-term use. Regardless of XRP's practicality, it has still proven to be a highly volatile instrument, allowing traders to gain exposure to potential gains and losses. And this brings us to the end of today's discussion. I hope you got all your answers related to XRP and other cryptocurrencies and the major differences among them from this discussion. So guys, that's it for today's video. What do you think about XRP and other cryptocurrencies? Tell us in the comments section. But before that, don't forget to like and subscribe to our channel for more amazing content. And thanks for watching.